This is a really important video. We're going to go through some psychology of how to deal with the red days, and more importantly, how to profit from them. When things go red, there's always a reason. You just need to keep asking the question, why? Why? Why seeking the knowledge of what is going on? There are definite ways to handle days like today that will take the stress out of any negative or red action, and strategies to help you think from a really positive perspective, a realistic one, but a positive one as well. Stay tuned, you're going to find it really valuable. Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome, and welcome back CTKS family. When many people look at the market like this, so much red, the first thing they think is sell. It's really easy for emotions to take over the buying and selling decision. It takes a lot of time to step back from the redness or the greenness of the market to start to focus in the question on why. Inside the CTKS Method monthly service, we mentioned that there could be a lot of negative volatility around this particular time of the month because the FOMC meeting minutes. A lot of people are expecting a pivot, but that's not what the data is showing us. There's currently an 88.7% probability of a 25 basis point increase in the federal funds rate come the 26th of this month. The why question is really important for you to answer. Why did materials get hit so hard? We can see across the board they were hit very, very hard, but the question is why? It's often helpful to understand what a particular sector does. The materials sector is all about making. It's all about the input into other sectors. Chemicals, construction, paper and packaging, and of course, metal and minerals. So now we know what, but we don't know why. Well, do we? The Fed is going to increase interest rates. Increasing interest rates puts pressure, positive pressure on the DXY, the US dollar currency index. The DXY was released 22 hours ago into the CTKS Method service. What we need to understand, where is smart money buying or selling? Looking at the DXY, if you're if you're into commodities, gold, silver, and of course, if you're into Forex, is very important. But it's also important if you're into the stock market or crypto or bonds. So the DXY is important no matter what you do. What is this? What is this line? This is gold. And what do we notice about the relationship, the current directional relationship between gold and the DXY? Please let me know your thoughts in the comments. Active learning is always part of really getting it and understanding it. The more that you apply your mind to something, the more patterns that you will see. If you're into gold, knowing the smart money buy and sell levels on the DXY is very, very important. And we could see that there was a smart money sell level. Just think about price being here and it was getting pushed down. There was a smart money, what it was at that stage, a sell level that turned into a buy level at around that 103.1286 mark. And then we saw the resistance inside the market playing out in real time. And the DXY has cleared that resistance. Inside the CTKS Method monthly service, you get all of these lines out to the end of the month with a forward projection as well, using three-dimensional risk management. The DXY is actually one of the greatest whys that you can understand. Its directional movement impacts so many things. It's also really important to understand what is coming up in terms of economic releases throughout the month. This is a critical thing that professionals do. They want to understand what's on the radar. Another thing to note, as the DXY comes up, you can look at the DXY increasing in value as a flight to safety. When you get a risk-off flight to safety, it means that other assets denominated in US dollars will decrease. This makes it incredibly important to understand the smart money buy and sell levels on the DXY if you're in crypto. Increasing interest rates inside the market mean that there's absolutely upward positive pressure on yields. When yields go up, bond prices go down. What does this mean? It means that the actual real rate of gold and precious metals goes down. What does that mean? Well, gold absolutely does not like increases in rates, and it doesn't like increases in inflation, and it doesn't like increases in the DXY. And we're getting a bit of a triple threat, and that's why gold is making its way down at the current time. Money is always chasing the greatest yield. When you see interest rates go up, money can leave the stock market and go into the banking system. When people don't know what is happening with either the stock market or the bond market, money can flow into the DXY, pushing it up. That's like stacking dollars underneath your bed, for example. We are seeing the VIX, the fear gauge of the market, starting to spike up. It is pretty low levels at the moment. There's not really wholesale fear at all. Many people have been reaching out and saying the analysis of the top tier particular charts across global markets, the tier 1 charts, has been a game changer for them. I'm just so thrilled for you all. It takes many decades to learn that there are powerful charts that control the chart patterns on other charts. Normal basic technical analysis is just literally only look at the chart in front of you and just disregard everything else. But the way to actually be profitable in financial markets is to understand the tier 1s first. For example, if you were not looking at the DXY and you would focus solely in on gold, would you be missing anything? Please let me know in the comments. When Bitcoin comes down, we know no alt can escape Bitcoin's gravity, but some alts can overextend the positive direction and underextend the negative direction of Bitcoin's gravity. That's what we're seeing in Solana, although it's just really early days. But that is a good thing to see. Solana is a powerhouse. When we look at the greatest gainers over the past 24 hours, in the top 100, we don't see much, and we're seeing a lot of stable coins. This is meaning that the sell-off has been broad-based. Also, Solana is just a little bit above 1% up. Turning to the greatest losers, top 100, Zilliqa takes our pole position, followed by Bit, Comp, Maker, Aave, Mina, Render, Phantom, and the Graph. Yesterday, we talked a little bit about Aave and Zilliqa. They were the greatest gainers in the top 100 just 24 hours ago. I wanted to draw your attention to this particular chart just here. You could see Zilliqa had a cut of upside momentum just here, whereas Aave was experiencing a cut under. Both the 7-day look fairly reasonable, as well as the 30-day. But just bear in mind, Aave and Zilliqa depend on the DXY, just like gold. A lot can change in 24 hours because of external events. The DXY will impact all of your cryptos. Time traveling back one day, we can see Zilliqa had that cut over. It was showing that it had upward potential for price. But we can't actually just assess this one chart. We must dig in. A bit of a tip that you can do, just put charts side by side. The price was around here, 78.08 for Aave, and around 2 cents for Zilliqa. What we actually saw was Zilliqa was being very powerful, but we know something about this. Sharp angles tend to do something. So we need to be careful. What we saw here was a more consolidated approach, potential breakout. The interesting thing, even though Zilliqa had a cut over, it was Aave that had more upward price potential. That's because it had more time to digest its gains and seek to move up. But what happened? The DXY happened. Getting to know your Tier 1 charts is absolutely critical if you wish to be synchronized in with the markets. Time traveling back 24 hours ago, I put a $500 level on XVG and sold it within the same day for a 42% gain, even though the market looked like that. I posted this one out to Twitter yesterday. How did I know how to pick XVG? I applied the knowledge from LV21, Borsog Secrets. It's a really important lesson, that particular one. But you just can't go into that lesson and say, oh, I've got it all, because this lesson relies on every other preceding lesson. If you have weakness in your understanding, it's because something may have been missed in previous videos. To understand the Borsog, you need to understand every single lesson from the masterclass. When you do so, you'll find it doesn't matter what the market looks like, you will get synchronized in. Also, it's critically important to look at the tier 1s and to understand what economic events are coming up. I'd like to thank Oscar Bollinger again for his kind generosity in offering a CTKS partial masterclass scholarship. The masterclass was set up so that you can become your own financial advisor. You can read the charts, you can read the market, you can understand what is going on because you have the knowledge to read cross interdependencies. You understand the big question of why things happen. One very important thing to understand, if you have the knowledge but you're stuck in zone 1 or zone 2, the knowledge will not work effectively for you. It can't, because your emotions have taken over the thought decision process when it comes to buying or selling. For example, if you look at the red on a day like today and you have no feeling whatsoever, you've made it. If you look at the markets like this and have a feeling of positive expectation, you've really made it. But unfortunately, most people look at a market like this and they get really concerned. The knowledge is critically important, but once you have the knowledge, you must be able to act on that knowledge. Therefore, we must be prepared to know what we will do if price goes against us, goes nowhere, or goes for us, because the market pays us when we're synchronized, and we pay the market when we are desynchronized. Returning to Zilliqa and Aave, what typically people do when they have a retail mindset, they buy on green and they sell on red. They could have bought Aave and Zilliqa yesterday and sold them today. What professionals do is exactly the opposite, and it's really hard to get into this concept. How do you buy on red? Isn't the price going against you? Aren't you making losses? Yes, you are, but you know what you're doing. When people get into zone 3 thinking, they get on the right side of the percentage. We could say with Zilliqa and Aave yesterday, we were on the wrong side of the percentage, but there were many other reasons for this. In zone 3 and zone 4, we master fear and we run the numbers. It's incredibly important to do both. I found one of the best ways to master fear, or perhaps I could just give you a bit of a story from my past. I commenced lecturing statistics when I was 18 years of age, and I looked maybe 16. I felt really intimidated. How would I get up in front of a class and deliver something where people knew that I was so young? Surely they would say, "What the hell is this kid teaching me this for?" How did I overcome that fear? I put at least 20 hours or maybe more into every hour that I taught in front of a class. How did that manifest itself? When I got up in front of the class, and there were quite a few people in my class, I would just do the whole lesson from memory. I could fill the board with advanced mathematical formulae, and it was just jaw-dropping to be in the audience to see that. But what was I doing? I was mastering my own fear by preparing as much as I possibly could. I remember that people came up to me after my particular lectures and said, at the start, I thought, "Why are you here?" But at the end, I said, "Yeah, I know why, because you really know what you're doing." If you're trying to battle fear, just boost your knowledge as much as you possibly can. That is one way to master fear. I hope that helps. Another way to master fear, especially when it comes to financial markets, understand that when you're looking at a blanket red day, the vast majority of people are selling. Why are they selling? They're taught to not make a loss. Who taught them? This is the ultimate active learning question. Who taught people to sell on the red? Who taught them to buy on the green? When people see a red market, they panic. They think that their gains are getting evaporated, so they want to lock those gains in by selling. Because they were taught by an unnamed source, buy ... sell ... Please let me know what the dots are. As a professional, you want to just let go of all of that rubbish because it is rubbish. It's designed to trap the majority of people into the wrong side of the trade and the wrong side of the percentage. When you see a market like this, hopefully, eventually, you'll say something like this: about time I can start getting my buy orders filled. What you'll find over time is that life's internal battle is the real battle, especially when it comes to financial markets. You'll have to battle against yourself to disconnect from negative emotional states such as "you are right, the market is wrong." You'll have to battle against yourself to get off the emotional roller coaster. When you get to the professional side, there is no roller coaster. Instead, your understanding, your emotional mastery will just say, "I'm cool with this, about time." As smart money, it's really important not to get trapped on the wrong side of the percentage, and this is just going back one day, 24 hours, to the greatest gainers, Aave and Zilliqa. Fast forward to today, Zilliqa and Aave are down, and they're in the greatest losers. Another thing to keep in mind is Rule 4. Price moves in waves. These waves are an inherent part of financial markets. You must get used to the turbulence and volatility. Turning to the top 8 cryptos, we always notice what Bitcoin is doing because Bitcoin's gravity will play out on the alts. One of the beautiful things with the alts, they can give us a directional turn in Bitcoin's momentum. So we love the alts. We can see over the past 24 hours, Bitcoin has been coming down, and we'll cover off the smart money buy and sell levels just in a little while. And we can see Ethereum moving in that direction of Bitcoin's gravity, but unfortunately with greater negative momentum. The same thing with Binance Coin. XRP has greater negative momentum than Bitcoin. ADA has greater negative momentum as well, as does Doge. But look at Solana. Solana is starting to invert. Go Solana. And what about Litecoin? It has greater negative momentum than Bitcoin. The key to understand, no matter what the alt is, it is moving in directional correlation with Bitcoin. Anytime Jerome Powell tends to talk, the markets are not quite happy with that. And we saw the DXY spike. But what's happening with Bitcoin? It's found positive momentum, just that positive smart money buy area, that safety net at $30,410. We know that if a particular chart, the price can't get over a smart money level, and we saw a smart money level around that $31,000 mark, where is it going? It's going to the next smart money buy level, the next safety net below. If it has a climactic sell-off, it's probably going to break through a couple of levels before it gets caught and it can recover. This is why knowing where smart money is buying and selling is incredibly important. I would suggest you cannot get synchronized without it. Keeping your eye on the DXY levels will be very important at the moment. If the DXY continues to spike up, yields continue to spike up, we would expect Bitcoin would come down to that 29,946 level. If it finds support here at 30,410, we would expect it to go up and re-challenge the 30,986 level. This is the power of the CTKS method. It just creates stress-free analysis, and that's something that you really need. I lectured first and second year statistics for many, many years. In fact, I absolutely adored the subject. And I found when my students didn't have an understanding of statistics, what actually they didn't have was persistence and commitment to learning the materials. A lot of students tend to gloss over things and say, I just want to get to the good parts. I used to explain it this way: if you don't have a solid foundation, all the flaws, the stories that you build in the building of your knowledge will be shaky because there's no foundation to hold it all together. That means your knowledge will collapse. That's why I always suggest go slow to go fast. There's nothing wrong with just putting your foot one in front of the other. It's not a race. At times like this, when the markets are red, please focus on your learning. It's just a thing to say, what can I learn from this? How can I do it better next time? Being kind to yourself is incredibly important. It's very easy to be unkind to ourselves, and especially unkind to other people. But that doesn't get anyone anywhere. The key is just letting it go. If something happened and you didn't get the result that you expected, just learn better and do better the next time. It's incredibly important when you're in financial markets. You will get slapped around by the market because you're desynchronized for some reason. When you find what the synchronization is, and you just learn from that by being kind to yourself, because that opens up humility and patience. You can just literally say, thank you, market, for the lesson. What did I learn and what can I do better the next time? Unfortunately, in Zone 1 and Zone 2, people melt into negative excellence. They become very mean and very aggressive, causing outer trouble and internal conflict. You can see this is a really hard place to learn. That's why Zone 3 is the learning and the courage zone. When you're focused on learning, you must give up blame and all that negative excellence and embrace positive excellence. Why is that the case? Because your balance depends on it. And so does your happiness. When you gain more and more and more knowledge, more and more probability stacking, more rules, you start to understand that the market has got nothing to do with certainty. All that's happening inside the market is moving between waves. Waves up and waves down. Where are those waves crashing against? They're crashing against structure. They're crashing against interdependence and intercorrelation of different charts, and we've just focused on the DXY today. I'm very proud of our global family. I just reached out on Twitter and said, how are you feeling about the red? And people said, well, I'm feeling pretty good. It's all about opportunity. I'm feeling pretty cool, calm, and relaxed. We have such an amazing global family. Kate and I appreciate and so grateful for all of you. And the comments in yesterday's video, such wisdom. It's just a privilege to be here sharing this time together. Personally, we love Rule 621, buy on red, sell on green. There's Borsog, the price eagle, screeching away in the background. It's realistically about getting on the right side of the percentage, and percentages are your best friends if you know and understand them. In Zones 1 and Zones 2, people can be very, very negative. In Zone 3 and Zone 4, people are quite optimistic. They're positive in a realistic way. Why is that? Because if we're not positive, realistically positive, not positive in a silly way, but positive in a realistic way, we can't participate inside the markets. They're just too turbulent. That's why the CTKS Creed is very important, because better habits create a better life. To keep positive, we must understand that the world is for us. The world is not against us. That opportunities are everywhere, and we are worthy of those opportunities. It's also not a race. We can take our time. It's not a competition. Our success in life has nothing to do with other people's success. We will get pullbacks in life, and that will give us strength for the next life rally. And if you're currently going through a life pullback, please know that our love and healing thoughts are with you. You're not alone. And the sun will definitely come out again. Being dedicated and committed, either winning or learning and never blaming, is the secret spice of life. And solving our problems with positive excellence is the way to go. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.